Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special report brought to you in association with ASB. Today we're going to have a look at the concept of the global reserve currency. Now currently this is the US dollar. The US economy is the world's biggest, and for the last 20 or 30 years, really since the collapse of the Bretton Woods Agreement, the US dollar has been the bedrock of international trade and international finance. But now that is being questioned as the US government borrows incredibly heavily and the US Federal Reserve starts printing money hand over fist. Now the biggest protagonist for a change in this situation, to change the global reserve currency from the US dollar to something else, is actually the Chinese government. In the last week, the head of the Chinese central bank has argued that the global reserve currency should change from the US dollar to something called special drawing rights. It's got a real catch to it, hasn't it? These are things called the special drawing rights set up by the International Monetary Fund. They were set up in 1969 to support the US dollar's role as a global reserve currency as the world shifted away from the gold standard properly. And what it does is collect a basket of currencies together, including the US dollar, about 44% of that basket, 34% for the euro, 11% for the Japanese yen, and 11% for the British pound. Now China is saying it wants to move to the special drawing rights, although it would like to reconstitute that basket to include, surprise, surprise, the Chinese yuan. Now why is this all important? Why should we care here in New Zealand? Well, the global economy has been set up in recent years along these lines. Chinese consumers saved money and the Chinese government saved money, and that was lent to US consumers and the US government, who would spend that money, often buying Chinese exports. And that's how the system worked. That's how the money flowed around and around. Now the debt got too much and the US government and US consumers are having to pull their heads in. The trouble is they're not, well, certainly not the US government, which is spending hand over fist to try and restart the economy. To do that, it needs to borrow money from the rest of the world. And of course, it's going straight back to China again. Now China is worried that all this money printing and spending by the US government will devalue the assets it already has in the United States, including $1 trillion worth of US Treasury bonds. So China is rattling the US cage and saying, be careful, don't spend too much, don't print too much, or our assets will be hurt. Oh, and by the way, we think this current situation where the US dollar is the reserve currency doesn't make sense in the long run. It's certainly worth a debate and something we should all think about in the next few years as the global financial system is shaken to its core. I'm Bernard Hickey. That was a special report brought to you in association with ASB.